Thank you very much there, Tim. Don't worry, it's not the first time. We often have technical difficulties over here. So good morning, everyone. It gives me great pleasure to tell you about Neometals and our greener battery materials business. Next slide, please. We are listed on the Australian Stock Exchange and the AIM Exchange in London, so always consult a licensed investment advisor. Next slide, please. So Neometals, we're actually producing sustainable battery materials right now from our operation in Germany. My presentation today will pretty much focus on the lithium-ion battery recycling business, although we have other businesses that we're developing in terms of recovering vanadium from high-grade steel slags up in Scandinavia and lithium chemicals, where we're starting that in Europe. So all of our technologies are backed by, all of our businesses are backed by technologies that we developed, and really we're commercializing with very, very large partners. They're very, very green. I'd challenge anyone to try to get higher grade, lower cost, greener battery materials than us. And those processes that we have developed really embody our commitment to general ESG principles, well before ESG was even thought of. I mean, we started developing our lithium technology in 2012. We went into battery recycling in 2016 when people thought we were crazy. We're now leaders of the pack, which is fantastic. So as we're commercializing these overseas with big multi-billion-dollar companies, our focus returns in Australia to the continual improvement of those technologies and commercializing them. We've got a strong growing team of professionals, about 40 of us now. We've got a good track record of making money and returning that back to the shareholders. We've returned more than $80 million in cash dividends, buybacks, and in-specie distributions. Our last return was demerging our nickel business, which is Widgie Nickel. That was a $26 million return for the shareholders. And, if you'd been a Neometals shareholder over the last 7 years, your annual TSR would have been 70%. So it's been good days. Next slide, please. So our portfolio, we've only got one asset, a titanium asset left in Australia. Everything else is based in Europe. So we've got a 10-ton-a-day lithium battery recycling operation in Hilkenbach, Germany. We're working with Mercedes-Benz to start building them their own lithium battery recycling plant at Kuppenheim. The vanadium recovery is up in Pori, Finland, which is close to where the steel slags are being made. We're looking to put a battery recycling plant into Canada with Steel Company of Canada, and looking to commercialize our lithium technology with Portugal's largest chemical company in Estoril, Portugal. Next slide, please. An experienced and growing team. I won't go through everyone because I've been warned we've only got 10 minutes. Next one, please. Corporate dashboard, market cap of about $800 million. We've got about $90 million in cash and investments, no debt. The board, founders and management are the largest shareholders in the business, so we're very, very well aligned to making a real fist of it. We've made lots of money and shared it back with our shareholders. Next one, please. So recycling, we own 100% of it. The technology, SMS will soon earn 50%. Our partner SMS is a 150-year-old German plant builder based in Hilkenbach, Germany. They've got 14,500 employees in 95 sites around the world. They've got construction facilities on 4 continents. And we're developing that technology in a German incorporated joint venture called Primobius. Next slide, please. So, we all know that there's going to be more EVs. They're building all the gigafactories around the world. I think Benchmark monitor about 300 gigafactories that are in the stages of getting built. Essentially, when they start making these cells, about 10% at steady state comes out as production scrap. In the early years, it's very, very high. It took Panasonic 5 years to get the scrap rate at the Tesla's gigafactory down below 20%. So what we've designed is a 50-ton-a-day operation, or 20,000 tons per annum, to take the off-spec as they make the cells. And then we will have a larger 500-ton-a-day plant, or 200,000 tons per annum in the future, to take the end-of-life vehicles as they come back. And, each gigafactory really needs that much capacity. So on the right-hand side there, what you're seeing is the available pool for the global recyclers, initially production scrap. But what we're finding at our operation in Germany is that the end of life warranty returns and returns from accidents are actually the majority of the feed that we're experiencing now. Next slide, please. So what we've done is essentially create a base metal refinery to get all of these stuff not out of an ore concentrate out of the ground, but actually out of the battery. So, you know, to put it in something that most mining people can understand, it's the same as having a ton of ore in front of a plant that's got 15% nickel, 15% copper, 2% cobalt, and 2% lithium. It is incredibly valuable. So we developed a hydromet rather than a smelting refinery to produce cobalt sulfate, nickel sulfate, lithium sulfate that we can make into carbonate or hydroxide, and then copper and aluminium foils. Next slide, please. So we created this safe, sustainable process. If anyone doubts how sustainable it is, we made it into the finals of the German National Sustainability Award in 2022. We were gutted not to win, but very honoured to have been nominated. These electric cars, you know, they have twice the carbon footprint of an internal combustion engine. That's because of the batteries and because of all the feedstocks that go into the batteries. Come from exotic locations like South America, Australia, the Congo, Indonesia, you know, but end up primarily into Korea, Japan, Europe, North America, in the form of cells that have largely been made in China. So to reduce the carbon footprint, the pyrometallurgical or smelters that do some recycling, they incinerate a lot of the product and lose it, but that sort of cuts half the carbon out. We're looking to strip out more than 95% of the carbon out of new batteries. Next slide, please. So what do we do? So the plant that you can see there on the right-hand side, that's the stage 1 shredding spoke, where we take the cells after they've been discharged and dismantled, a lot of the modules, so you can get individual cells or modules that come out of the cars. And we're actually finding about 70% of our feed is modules. So we have to discharge and dismantle them. We then shred them, separate the plastics, the casings, and the metal foils. And then we put what's called a black mass, looks like pepper. And that's a ground up graphite and cathode materials of lithium, nickel, cobalt, and manganese. We then put them into sulfuric acid. We use solvent extraction and ion exchange to then drop them out as a high purity material for reuse in new batteries. Next one, please. And there's a strong rationale for having them both integrated, the both parts of the circuit. If you just do the spoke only, which you can do, and assuming a 50% payability, it's not a bad business making black mass and just selling it into the pyrometallurgical guys, but really to close the loop and to address, you know, the circular economy and the requirement to produce recycled materials in new batteries, which is coming into effect in Europe from 2025 onwards. You know, you really do need to put the refinery hub there, and you know, to show you how cost effective our process is, if I take the total site costs and only take out the cobalt credit and divide that amongst the nickel tons that we produce, we're the new lowest cost nickel sulfate producer in the world. So then the goal is just get bigger. Next slide, please. So flexible business models. At the moment, we're running an operation where we're actually charging and receiving between 1,500 and 1,650 euros per tonne to process the batteries, which is great. We keep the black mass and sell it. So we're making cash at the moment. We've also got partnerships. So to get bigger, we're prepared to actually share the economics with those that have got batteries. So the cell makers and car makers. And I'll shortly run through examples of how we've got partnerships and licenses. Next slide, please. So in Europe and North America, they are the key markets for us. We can't really justify going into China at this juncture, and look, Europe and North America are growing very, very quickly. If we have a look at Europe, you know, the total addressable market in 2026 will be about 250,000 tonnes. The total installed capacity at the moment would be about 100,000 tonnes. So, you know, there's a lot of capacity that needs to be added, and we plan to be a very, very large part of that solution. And then, of course, later in the decade, it just gets bigger. So we're one of the only urban miners in the world with an ore body that keeps growing every day as these lithium batteries wear out and they make production scrap. Next slide, please. So our commercial pipeline, we've got a spoke that we're operating ourselves. We're looking to put the 10-tonne integrated plant, that's plant supply and licensing from Mercedes-Benz. Steel Company of Canada, looking at putting our first integrated 50-ton. We'll shortly announce the results of our own study to put one into Germany. And we've got an MOU to put one into Japan. Next slide, please. And this is a video that Mercedes-Benz put out when they announced our selection as a technology partner. It was a very grueling 16-month process, global. So I'm pleased to say an Australian-generated technology was picked. We're very honoured to be working with Mercedes-Benz. Like I said, we've entered into a 5-year collaboration, plant supply licensing, and then we have people embedded and teach them essentially how to use the technology. Royalty free for the first 10 tonnes per day, but you know, that's our plant there. That's their cells going through our plant. That's some of the foils that we get off that I mentioned. That's the black mass in the leach, and that's our solvent extraction circuits, pulling out very, very nice coloured materials that we get paid handsomely for. So yeah, really, really looking forward to closing the loop for Mercedes. Next slide, please. So that's just a bit of a summary. Now this one is Stelco. So Steel Company of Canada, big steel producer going into the automotive industry. They want to transition from blast furnaces to greener steel, and that's achieved through using hydroelectricity in electric arc furnaces. That means less iron ore and less coking coal and more electricity and more steel scrap. So to get the steel scrap, they need more end-of-life cars. More cars are going to have batteries attached to them. So what we've done is we've licensed Steel Company of Canada on a 10% gross revenue royalty in the interim to allow them to secure feedstocks. Once we offer them the plant, we've then got an option to buy into 50% of that by refunding half the sunk costs. So it's a fantastic deal. For both Mercedes and Stelco, we are looking at supply contracts at the end of the year. Next slide, please. Timeline, like I said, engineering cost study out this month. The engineering cost study for the Hydromet hub in December, the spoke plant for Mercedes-Benz and Stelco in December, and a decision to go to buy into the Stelco recycling joint venture in Japan. Next slide, please. Sustainability, well, we're not greenwashing everything. All of our technologies are green from the very day they were invented. We're putting out our third sustainability report. Next one, please. And so we've got a fantastic portfolio of ESG aligned materials. We're producing 5 out of the 6 most positively impacted commodities as forecast by the World Bank in 2050. Proprietary technologies, great strategy, strong balance sheet, great team, good track record of making money. I think we've got a fantastic organic growth profile. So thank you very much for listening to me today on Share Cafe. And Tim, no doubt you got a question or two.
Yeah, thanks, Chris. A fascinating, successful story. Congratulations. There was a benchmark minerals report that just came out, or it was a brief report that came out just prior to today or prior to the webinar. And it's talking about how China dominates the recycling market. The top 8 recyclers are operating from that country. Is there a kind of a political push, a geopolitical push for recycling to be treated as importantly as in the supply chain argument for EV batteries? There's this political push to own the chain, the supply chain. Where does recycling sit?
Yeah, so look, if I take Europe as case, so Europe is the largest importer of cells, predominantly from China or, Asia. So they have got some cell making capacity. Europe and America clearly behind China and Asia. But catching up. So recycling will play a large part of trying to secure the feedstocks for future battery production. So, recycling is mandatory. They're increasing the recovery rates that you need to do. They are having minimum recycled content in 2030 and 2035 of 10% and 20%. So, they're more expensive cars, obviously, that are made in Europe. And so, they can import the cells. They just don't want them leaving. So they really want to create a fortress around each of those markets. And the Chinese recyclers, yes, because, 80% of the world's lithium batteries are made in China. So it then follows that the production scrap has generated, 8 of the top 10 recycling companies in China, but they're really doing production scrap. And to what we can work out, they're not really going overseas. And because their market's so big, there's no need to. Whereas, who should be a natural owner for our technology? Should be the car makers, right? Because there's probably not going to be enough for every car maker in the world to secure their feedstocks, right? And so, JB Straubel, the Tesla CTO, left and set up Redwood Materials, and Redwood are putting recycling plants wherever there's a Tesla gigafactory. We're tied in with Mercedes-Benz. Some of the other car makers have tied in with one of our competitors, Lysical, in the US. So yeah, it's a real issue to try to reduce your supply risk going forward. And circular economy, if you're really trying to take the carbon out, then yes, you do need to recycle. And a lot of these guys are in the Dow Jones Sustainability Index, where you've got to recycle 85% of your car. And whilst the EV fleet's a very small percentage of the total fleet at the moment, as that grows, they really do need to have their own solutions. And there's basically not many of us, only because we started 6 years ago.
And your focus is on Europe. Where does North America sit in terms of your development?
North America will be our biggest plant at this stage. So, we've got a 10-ton plant in Germany. We're looking to supply Mercedes a 10-ton integrated plant with a refinery. The 50-ton plant is initially going to go at Stelco's Hamilton, former Hamilton Steelworks. They're not producing steel there anymore. It's a fantastic site just outside of Toronto, located at the top end of Auto Alley, and they're suppliers into the US car making industry. So, for them it's a logical step for them to expand into whole of car recycling and then pass the batteries over to us in a joint venture to handle the recycling.
And there's just some, excuse me, and there's some questions here around your Promobius. Yeah. Promobius, the recycling plant, when's that kind of come online? There's been some delays. Is there any more color on that, please?
So look, the 10-ton plants, we're just in the ramp-up phase. In terms of the engineering cost study on the 50-ton plant for Germany, yes, that's running a little bit late, but that's only because we've exceeded our expectations and we've inked a couple of commercial contracts. So we're more focused on doing everything to deliver Mercedes-Benz and Stelco actual plant supply agreements in December than we are in finishing evaluation or feasibility studies for future plants. So our commercial success has exceeded our evaluation timeline.
There's a technical question here. Did the company receive the federal emission permit from German authorities to enable the shredding plant operations at a maximum battery input rate of 10 tonnes per day?
That is correct. We have an emissions license, what's called a BIMSCH. That's the short version. I couldn't possibly pronounce the full German version.
Okay, Chris, that's all we have time for. It's a fascinating story. Congratulations, as I said, and we'll follow with interest.
Thank you very much. Have a great day, everyone.